Wait, what is all this good news? Like, what the hell are we supposed to do with that shit? Hey, I'm John B. I give you the hacks for mortgage and media, that's why you follow me. Now, first we gotta take a look at home affordability. It's at its worst level like ever, which we already knew. But that might not be the case for 2024. See, right now rates are really high and prices are staying high because there's a lot of demand. And we could see prices come down in some markets because they're so elevated right now. Plus, we're almost guaranteed to see rates drop. One or both of those things could really help with this affordability crisis we're dealing with right now. We might also be getting help from the government, which would just be really weird. The Democrats just introduced a bill that would kick a lot of Wall Street out of the housing market. It would ban hedge funds from buying up single-family homes and force them to sell their current homes over the next 10 years. This could open up inventory and create a lot of new opportunities for real home buyers. But the shit's gotta pass first, and I don't know about that. You see, we have this thing called lobbying. We also saw consumer sentiment come up. This is the first increase in like 5 months, and we didn't really expect it. We're finally starting to feel the effects of inflation dropping. That's another good sign that the Fed's not going to have to worry about raising rates again. We might also be working harder. Worker productivity went up a whopping 5% over the last year. And if we take out the pandemic craziness, that's the highest rate since 2009. Now, this could be a result of the use of AI in workplace, as it makes basically every process more efficient. But it could also just be that corporations are squeezing their workforce for more labor out of the same pay. Speaking of labor, job openings went down more than expected last week. This is another sign that the overall economy is starting to slow. But then, of course, new payrolls were actually up more than expected. However, this could be an anomaly because we had so many strikes ending and we're getting ramped up for the holiday season. We'll probably have a better read at the future of the job market next month. But ING Economics doesn't need that long. They're already predicting that we're going to get 6 rate cuts from the Federal Reserve next year. That's a big deal because that means the economy as a whole would be dropping a lot faster than we thought. And as a result, the Federal Reserve is going to have to get aggressive with the rate cuts. And the market's got its fingers crossed, but it's not ready to hold its breath just yet. Rates stayed pretty much flat for the week as we wait for more economic data. And we've got some big numbers from the Consumer Price Index and retail sales this week, so stay tuned and I'll keep you posted.